Hey, this is AJ. Welcome back to the Handyman process. And Happy New Year. Happy 2024. In today's video, I'm going to be talking about my end of year numbers. What do my 2023 numbers look like? I'm going to kind of walk through kind of my numbers, my process for taking my profit and loss for the year, and then migrating it over to something called the Schedule C for taxes, so that I could basically file my taxes at the end of the year. If you've been following my channel for a while, you know I'm a part-time guy. So this, the money that I make is in addition to the W-2 money that I make in my day job. So stay tuned. I'll kind of walk through what my numbers look like, what the final profit and loss look like, and then how I migrate that information over. So stay tuned. So first thing, I wanted to make a highlight. I'm on my website right now, iamhandy.org. If you're not familiar with this website, it's just a website that I set up to kind of share a lot of the information that I'm sharing with everybody. It's open and it's free. I try to find the best of what's out there for handymen that's free, open source, and available, and kind of post it here. So I've slowly built this out, the information out here. But one area that I have, what I'll be talking about today, is if you come to the website, if you're in the desktop version, you can either go over here to more. I think you can scroll down and find it somewhere too, but you can click on the taxes button. And what that's going to do is just going to open up all the information I have for taxes. So just some, let me do a few things here. I'm going to hide this thing. Okay. Um, so just some basic general overviews. The first thing you'll see here is this recommended reading. That's 475 tax deductions. If you click on that, it's going to basically bring you over to Amazon. And that's the book that I use. I have it kind of with me all the time. And it really helps me to understand the deduction process, what I can deduct, how I deduct it, and how I categorize it. So I always have this as a reference, especially at the end of the year, but I also reference it throughout the year as I'm categorizing transactions in my banking system, just to make sure that I'm putting them in the right area. And as I go through and show you my numbers, there's a couple of things that I probably miscategorized over the year that is a lesson learned for me going into 2024. So it'll be a little bit cleaner and smoother at the end of the year. But I highly recommend that. If you want to help the channel out, if you click on this link, it's an affiliate link that goes to Amazon. You don't pay more, but I get like 30 cents or something if you buy the book. Anyway, it's there. Uh, and then in addition to that, if you scroll down, all the videos that I've made on taxes will be in here, plus other videos that I found from other people who kind of go over taxes. So I try to add to it. If you have stuff that you want to add to it that you think is a great video you want to share, go ahead and drop it in the comment down in the bottom, and I'll add it to this list as well when I get around to it. The final thing is, in addition to that, I added this new recommended items area. If you click on this, you'll see some of the hardware that I'm using, some of the tools that I'm using that I've made videos on will be here, plus some links to what I use to basically accomplish those. Anyway, with all that being said, what I do is I'll put some clips up here. First of all, how do I bookkeep? If you've been following for a while, you know that I use a system called Novo, and I do my banking and my bookkeeping in that system. And I'll put links up here, video overviews of how I use that system. But I use that system throughout the year, and as I get income coming in or money going out in the form of expenses, I'm categorizing. I'm categorizing those expenses with the end in mind, and the end in mind is um, that I'm going to extract that data. If I can do this, I'm going to extract that data, and I just put it over here in move my visual here. So what I do is I extracted this information on the 4th of January, and it does a couple things, right? When I extract it, it tells me the date of the transaction, a quick description of what the transaction was for, an amount. If I put any notes in here, it'll give me the notes for that. And then finally, the big one here is the category. So this within Novo, you can automatically select categories. And if you do something over and over again, like Google domains I have for advertising, it automatically gets categorized into advertising. So at the end of the year, there's an area within Schedule C of the IRS filing that basically captures advertising costs. So as I scroll down, you'll see all my stuff. I've just sorted it here in that category because that was kind of the last thing I was doing. But these are all my transactions for the year, and then went through and as I show you here in a minute, I cleaned up a few things. But before I get into that, let me just touch on Schedule C really, really quickly. So Schedule C is if you run a business, if you're self-employed, you run a business as a single member LLC or sole proprietor, you're going to have to fill out this form, or your CPA is going to have to fill out this form. Now, I'll make a disclaimer: I'm not a CPA. I've never played one, but I have taken a bunch of accounting courses. I got an MBA. So I've been doing my taxes forever. Since I was 18 years old, I've been doing my own taxes. So it doesn't intimidate me. And if you're savvy and you want to do it yourself, you can do it yourself. But this is the form that you'll fill out either manually, or most likely you'll be using TurboTax or something like that, and it's going to prompt you to kind of fill out this form. So what I do is I basically just build my own template within Excel so that I could figure out what each of the boxes are going to be, what amount of money do I need to put in those boxes. So when I do file my taxes, probably next month sometime, I'll just copy and paste directly from this workbook here that I'm showing you. So if I go back to the workbook, to continue pulling that thread, what I did was downloaded all the transactions. Once I have all the transactions downloaded, I'm an Excel geek, right, or a data analytical geek. So I basically highlight all this information, and I do something called pivoting, where I can just pivot it, and then I can summarize. I'll keep scrolling over here. I can summarize all these categories. So in my pivot table, it essentially adds up all the advertising expenses I had and said, hey, you spent $223 in advertising for this particular year. Same thing for all the other categories: business insurance, meals. So if there's an exception to the deduction rules, I'll try to mention it as I go along. So for advertising, 100% I can deduct my advertising. Business insurance, 100% I can deduct my business insurance. Business meals is a little bit tricky. Right now, what I qualify for is 50% of my meals. If they're business related, I can deduct. I'll leave it at that. I didn't have a whole lot there, but that's what I had for that. Equipment repairs, I had a couple things that I had to get repaired throughout the year. If it's one note with this is when it comes to your vehicle expenses, you have a choice. You can either deduct the mileage expense, or you can deduct the actual expenses of operating your vehicles. It's a decision you have to make, and you kind of have to stick with that decision throughout the year. Me personally, I just use a mileage deduction. So you'll see later on in my video, I'll explain what I use for that. So if there's any equipment repairs that I have for my vehicles, I'm not capturing it here. It's just outside of that. The biggest expense I have is materials and supplies, or cost of goods sold is what most people refer to it as. So these are all the materials that I bought to do the different jobs. I get reimbursed um, for these material costs through my pricing when I close out my invoices. But I spend a pretty significant amount of money in that area. I also had one area where I had materials and supplies for rental equipment. That is a kind of a separate category, and there's a certain area within the Schedule C that it goes to. So I'll be end up changing that a little bit later on. But this particular charge is I had to rent a Penske rental truck for one particular job that I had. So when I did, I just put all the costs into that particular area right there. And then finally, this is one of the lessons I learned throughout the year, was your office expenses. It could be multiple different categories, right? You have a home office, but in my case, I bought some electronic equipment. I bought some printer, some monitors, and some other things that fell into this area. Maybe, oh, the chair that I'm sitting in, actually. So this chair I bought, all this stuff is a write-off because I'm using it in my office. In this case, I just used the category that was available to me in Novo, and labeled it underneath that. Then I got generic home office stuff: printer, paper, other expenses. Again, this I essentially, for the Schedule C, I rolled it all into office expenses. But when I was doing throughout the year, I was categorizing in these particular areas. Uh, Payment processing fees. I think I think that was one fee that I paid. For some reason, I paid my taxes, my estimated taxes, with my debit card, and I got charged $22 for it. It was just a stupid move on my part, but I can write that off. I can write those fees off. Usually, I just write a check, or I just like electronically transfer it over there. And then finally, work devices and software. These are a lot of my software that I have on a monthly basis to run my operations. So Markate. What else? I have a few other things in there. But if I went over here and I kind of filtered in there, you can see what I have. See, these are my starting expenses. Then I have money that I took out. So throughout the year, I took out $5,900 for myself, right? I needed money. I was up in Maine for a while. We wanted to eat some lobster. I took out some money, right? That's how I pay myself in this business. I don't take a paycheck every week, if you will. I just take out money if I need it for a particular reason. In this particular year, I only took out $5,900. Now, um, if just because I didn't take it out doesn't mean it doesn't get considered. It does not considered profit for the end of the year. It's a slight nuance. I'll touch on it a little further down, but this is just an owner draw. This is just how much money did you take out of the business. In the eyes of the IRS, they don't care. It's how much money did you make, how much did you have on expenses. Anything else is profit in their eyes. And I'll explain it as I get into the Schedule C here in a minute. In addition to that, I had owner investment, where I put in $1,000.67 throughout the year, and I probably did this from a cash flow perspective. So sometimes the cash flow is going up and down right throughout the year, and maybe I didn't have enough money to pay payroll or whatever it was, so I just took $1,000 from my personal account, put it in there to cover whatever was coming up, and then took it back out later on in some form or fashion. I did have one personal expense in there. I wasn't really sure. I had donated to a charity in the form of $25, but I'm not actually reporting this on my taxes because after looking at this book a little further, I really can't do that. So this just ends up being profit, if you will, that I can't deduct it as an expense. Then I have professional services. I pay a payroll provider. I had some CPA consulting stuff, some lawyer stuff, anything that falls in that category. And if you're not sure, you go through this book and it essentially tells you, you put this in professional services, you put this in office, you put this in material and supply. So highly, highly recommend this book. Get familiar with it. As I go through it, I just kind of mark off the things that are applicable to me. And at this point, it's in my brain. Nothing for reimbursable expenses, and then sales. So this is income. This is all the money that came in. I had 36,300 something dollars of sales this year for the part-time handyman business. So that's the money that came in. I had some subcontractor stuff. So I had a not much this year. If you're doing this full time, your numbers are way higher than mine. But in my particular case, I think it was a couple of haulaways where I was on a site. I was planning to haul it away myself. Job went a little bit longer, so I just bit the bullet, called somebody up real quick. They came over with their dump trailer, took everything, and away they went. And then finally, tax payments. So this isn't an expense, but I categorize it because I pay it out of that business account anyway. So the tax payments that I paid, my estimated taxes was in the neighborhood of $6,700. I actually way overpaid this particular year because I did two things this year. I continue to make my estimated tax payments, but I also changed the withholdings in my W-2 job um, because last year I ended up owing a little bit of money. And long story short, what I ended up doing is I ended up withholding in my W-2 job enough to cover my W-2 job and my business. So I didn't actually have to pay any estimated taxes because I was already paying it essentially through my W-2 job. So after I do all my taxes, I'll make another video kind of seeing where the dust settled and where I fell out. And then finally, I have wages and commissions. This is all paying my son. So I have my son on payroll. He's under 18. Technically, I don't have to run payroll for him, but I wanted to get in the habit of doing it anyway. So I ran payroll this year. He's going to get a W-2. He's going to get a W-2 in the form of $4,700 from me. The cool thing about that is um, essentially he can fund his individual retirement account. So he has an individual retirement account. Since he's under the age of 18, I had to set it up as a custodial account. But essentially, what we do is we take the money that he made and we fund his IRA. So we're setting him up to be a millionaire when he's my age. So he's going to continue doing that kind of going forward. But that's what I had in terms of W-2 expenses. So if you got kids, you want to put them on payroll, you got questions about that, go ahead and drop some comments. I'm going to do a live stream one of these days. I'm not really sure what topic I'll go over, but that people are interested in that, we can kind of go over that. Okay, so now this is all the information I had, right? This is a pivot table view of all the expenses I had. I just summed them up into these particular categories. Now, the next thing I do is I take that information and I put it into my Schedule C. So again, just to highlight Schedule C. Schedule C has these different parts, box 8, box 9, 10, so on and so on. I essentially just take those line numbers, put them over here in my sheet, and then a description so I can remind myself. And then I'm copying and pasting or summarizing from my pivot table over here into these particular areas. So Schedule C is broken into a couple different categories. The first one is income. What do I have from income? So there's a rough or gross profit that you calculate. So my gross receipts of $35,000. You'll see here that I had gross receipts of 35,384, but here it says sales of 36,000. Why? What's the difference? Well, the difference is I I can't forget that I put $1,000 into the business. So I take $1,000 off. It's essentially saying I'm taking my money back. So that's how gross receipts goes down to that level. And then our cost of goods sold. Cost of goods sold is just a summary of the cost of goods sold categories that I had over here. The 13 here, the 200 here gives me a cost of goods of 13.8. Then I do quick math and it looks on paper, hey, you got $21,000 of gross profit. Woo! We're not done, right? There's more money. So with that being said, I'm going to take a short break. If you're not familiar, I've released recently. Released a cologne, a unique cologne for Handyman. So I'm going to pause here, let you watch that video if you're looking for cologne. You can take a look at that real quick.
Introducing Wood Glue, a new fragrance by Handyman Process. The best handymen have a process. The best handymen wear wood glue. Wood glue. Wood glue, sold in the adhesive section of a hardware store near you. Wood glue.
All right. Hopefully you got a chuckle out of that. I know it's a little bit cheesy, but I didn't get a whole lot of views on that, but I thought it was pretty funny. So I thought I'd just throw it in there to break things up. Plus, I'm talking about taxes and it's pretty boring. Anyway, to get back to it, we talked about gross profit and gross income, about $21,000. But that's just gross profit or gross profit in this particular case. It should actually say gross profit slash loss. Um, but now I start to take more money out of this, right? So I'm starting with $21,000. That's the cost of goods sold is gone. And then I'm going back to Schedule C, and line 8 is advertising. So advertising is equal to what I had over here. And I didn't talk about my car and truck expenses. So I don't track car and truck expenses because I'm not paying my mileage out of my bank account. What I'm doing is um, I'm using a mileage tracking app. So for this particular year, I had actually started off using QuickBooks. I didn't like QuickBooks very much, but I used it for about a month or so. And in that month or so, it tracked all of my mileage, whether it was personal, you can see a business or personal, and multiplied it by the mileage rate, which is I think 62 or 65 cents, forget what it is. So for that first month or so that I was using QuickBooks, it was $267. Then I switched over to Mile IQ, and I'll put a video link up here on how I track mileage. Mile IQ is awesome. It's the way to go, at least in my opinion. So in Mile IQ, I had this other summary of what I did. So for Mile IQ, for this particular year, it tracks the start, all the stuff the IRS needs to see for records. And I also print all this stuff out because you're going to have paper copies of it if you ever get audited. But if I add up all my mileage for the year and multiply it by that 65 cents, I end up with $2,800 of deductible expenses that now I can come back to my Schedule C roll up and I can deduct that. So the total cost is about 3,000 something dollars. So now I'm using that as an expense, right? So the use of my car now is reducing my gross profit number. Then I take my other numbers, contract labor, insurance, all this other stuff is straight out of the summary that I had over here, which then gives me total expenses that I can deduct of $15,000, right? So now I've taken that 21,000, I've reduced it by 15,000, and now I have a tentative profit loss of $6,400. However, there's one more step you can do here within the Schedule C, and if I go back to that, you'll see. So as I get out of this area, here, I get past line 27, I get into this other area here where I can deduct use of my home office. Again, I recommend looking at the book for 175 tax deductions. which will give you a couple choices. I'll put a link over here to a video on the home office tax deduction and how you can basically use it. But in summary, you can either deduct a portion of all of your housing expenses or just use a simplified method. And I use a simplified method. And what the simplified method is up to 300 square feet, you can essentially deduct the square footage that you use for home office by $5. In my case, I use 220 square feet of my house, which happens to be my garage, which is set aside, which you'll see in the other video I have on that topic. So I multiply 220 times 5, it gives me $1,100. I have $1,100 here. I can further reduce this 6,400 by 1,100. I end up with $5,300 of taxable income for the year. So this is one of the advantages of being a business owner is you can use a lot of tax strategy in here. Like again, the chair that I'm using right now, cell phone purchases, all these other things are loaded into my expenses because I use them for business. And I always search for dual purpose things. So an example is the mileage. I mean, I got $3,000 in mileage deduction. I don't just go to the store and back for handyman business. I'm like, well, we're going to go to the supermarket. I might as well stop by Lowe's while I'm over there and get something. So now you're essentially double dipping, right? You're going to the hardware store, you just happen to stop by the supermarket on the way over there, but that whole trip is deductible because you eventually went to Lowe's to get what you need to get. So if you're savvy with that kind of stuff, you can drastically reduce the amount of money that you have to pay in taxes using particular strategies like this. I'll leave it at that. I'm not going to get into the nitnoid, but some people might look at this number and go, "Man, you didn't make anything." I was like, well, maybe I did. I just didn't pay a lot of taxes on it. So it's just the tax code is out there to incentivize businesses to stir the economy and get it going. It's up to you or you and your CPA team to take the advantage of it, right? You're leaving money on the table if you don't. So with that, I'll leave it at that. But these are what my numbers are looking like for the year. So I'll take this number once I get my W-2 from my day job, my wife's W-2. We'll sit down again sometime in February. We'll go over the numbers and go from there. So hopefully you got a little bit of knowledge out of this, a little bit of use out of this, maybe have a chuckle out of this. If you like this kind of content, you want to see more, go ahead and give me a thumbs up, hit the subscribe button, drop a comment down below, and stay tuned for the next video. Thanks. Bye.
Step into the unknown. This is where